Harvard, one of the most prestigious Ivy League schools in the country, has written a paper urging central banks to buy Bitcoin. And for the first time ever, FTX's Sam Bankman-Fried has issued an apology. We got all that and more, plus the top crypto news stories of the week that the mainstream media is not talking about. So you're definitely going to want to stay to the end of this episode. So anyway, y'all, let's go ahead. Let's get started. All right, big news. So first story today, let's get straight into it, guys. This is from Politico. Check this out, guys. Check this out from Politico. Harvard paper to central banks, buy Bitcoin. So let's head over to Twitter, guys. Let's read a little bit of paper and see what they're talking about. So this was posted on Twitter, guys. A new Harvard University economics paper explains why banks should hodl Bitcoin. Check out, this is the paper, guys. Hedging sanctions risk. Cryptocurrency and central bank reserves. Matthew Ferrante, Department of Economics at Harvard University, November 17, 2022. This is the abstract of the paper, guys. Central banks may shift their international reserve holdings in order to protect themselves against ex-ante against the risk of financial sanctions by fiat reserve currency issuers. For example, from 2016 to 2021, countries facing a higher risk of U.S. sanctions increased the gold share of their reserves more than countries facing a lower risk of U.S. sanctions. The paper explores the potential for Bitcoin to serve as an alternative hedging asset. I describe a dynamic Bayesian Kaplan model to simulate the joint returns of Bitcoin and other reserve assets under a wide range of plausible sanctions possibilities. Wow, guys. So with this economics guy at Harvard University saying that, you know, they could have just called us, guys. We've been talking about this on this channel since I started this channel, that Bitcoin, the central bank should adopt Bitcoin as not just a hedge against inflation, but what he's saying is as insurance against sanctions. As we know, guys, the United States dollar is the world reserve currency, but with foreign superpowers such as China and Russia now threatening the U.S. dollar as the world reserve currency, and the dollar's weakening internationally currently, that what he's saying is that we should adopt this Bitcoin standard, because if in a point, say like the Chinese dollar or the Russian ruble becomes the world reserve currency, that we would actually have insurance against that through Bitcoin, because the sanctions wouldn't apply. We could still transact on this decentralized network. So he's exactly right, guys. And guys, if this is, other countries are doing this right now. Google this. Google how much Bitcoin the Chinese government owns. Google how much Bitcoin the Russian government owns, and that'll tell you everything you need to know right there. Because as you know, the West is sanctioning, Russia. A lot of sanctions against Russia right now, not just from the United States government, from all governments. So what are they going to do, guys? They're going to find workarounds, and Bitcoin seems to be the best workaround because it is the fastest way to transact large amounts of money in a decentralized manner without the risk of sanctions. So, guys, this is Harvard University saying this. Of course, our mainstream media is not covering it, but again, guys, I would not be surprised to see our central bank, our Federal Reserve, our Federal Reserve has gold, so they say. But again, think about that, guys. We've compared Bitcoin, digital gold, right? He's saying in 2016 to 2021, the countries that had the most risk of sanctions upped their gold reserves to combat and insure themselves against sanctions. I mean, guys, it's pretty simple stuff. Bitcoin is digital gold. This is Harvard University saying it. You guys go check out the paper for yourselves. Go read the whole thing. Very interesting. We'll definitely cover where that goes. Now, let's get to the next story, guys. Sam Bankman-Fried's issued an apology. Guys, I'm not going to read the entire apology because it looks like somebody wrote this for him, to be honest. But here's a little bit of it. Hi, all. I feel deeply sorry about what happened. I regret what happened to all of you, and I regret what happened to customers. You gave everything you could for FTX and stood by the company and me. Guys, I don't accept this apology because check this out, guys. Exclusive, and this is from the Daily Mail. Exclusive. FTX boss Sam Bankman-Fried looks distressed as he is seen from his first time since collapse of his $32 billion crypto empire at his $40 million penthouse hideaway in the Bahamas. Guys, while all of retail lost some money, while the crypto markets collapsing, while the SEC and our Fed is threatening regulations, here's Sam Bankman-Fried sitting in his $40 million penthouse. Guys, a $40 million penthouse. Like, why is that disturbing? Because check this out. Despite Bankman-Fried facing possible criminal charges with FTX owing 50 of its biggest creditors more than $3 billion. He still appears to be luxuriating in the trappings of his wealth. Guys, this 7,500 square foot penthouse at the Albany Club boasts 5 bedrooms and 7.5 bathrooms. Guys, a $40 million penthouse. This is the guy that virtue signaled about climate change and that we need to be more green and watch our carbon footprint. And he's in a $7,540 million penthouse. Won't you check your carbon footprint, Sam? Again, guys, this is very disturbing. More and more stuff's coming out. I don't see a scenario where Sam's not in jail. It's going to maybe take some time, but shout out to all of you watching this. Shout out to Crypto Twitter because you guys are exposing it. When you see the mainstream media now starting to cover it more, that's because we're forcing their hand because they want to save what little bit of credibility they still have with the public, guys, because it really is disturbing, the puff pieces major news organizations have put out on this guy. Disturbing stuff. Let's get to the next story, guys. Got some good news, so check this out. The Texas legislature publishes new Bitcoin report. Governments holding Bitcoin, protecting self-custody, tax breaks for Bitcoin mining, Bitcoin education in schools, Bitcoin workforce initiative. Guys, this is from the Texas government. Texas Work Group on Blockchain Matters. And it says this in a paper, guys, Bitcoin as an authorized investment for the state of Texas. Again, guys, the states that adopt this stuff, the states that embrace it, like what Texas is doing, they are going to be the economic superpowers. Those states are going to be the most successful and most prospering states. And the few states that go the other way, well, you guys are going to see. Time will only tell, but it is cool to see Texas, and I'm hoping that other states follow their lead. I guess we could compare this similar to when, Colorado legalized marijuana, and we seen them actually have a surplus in tax revenue and all the good that they did for their schools. So hopefully, other states will learn from Texas, and when they see all the mining companies, all the tax revenue and all the jobs and all the innovation that's going to come from embracing this technology. Again, guys, we showed you yesterday, JP Morgan Chase. Now Harvard's telling you. So don't worry about what the mainstream media is telling you, guys. Don't worry about the FUD. This technology isn't going anywhere. I'm telling you guys, this technology isn't going anywhere. The central banks want to get rid of it. They don't like it. It threatens their industry. But this is the people's money. Let's get to the next story, guys. So this is from Decrypt. FTX collapse is not a crypto failure, says Minnesota Rep. Tom Emmer. The newly appointed majority whip did not mince words when blaming Sam Bankman-Fried and SEC Chair Gary Gensler for the industry's current state. Guys, this is what, and guys, I have no political, I don't even know who this guy is. I've covered him before, but I'm not, I didn't, he's in Minnesota, I'm in Louisiana, so I'm not trying to be political on this channel. But guys, this stuff really does matter. These are the people. These are the people, pushing the legislation and policy that's going to affect this industry. So we need to cover this. So check this out. He said, this is not a failure of FTX, Emmer said on Tuesday night to Fox Business broadcast. It's a failure of centralized finance and a failure of Sam Bankman-Fried. He's exactly right, guys. It's a failure of centralized entities. It is corruption at the highest level, and I'm glad at least somebody in Washington is exposing it for what it is and not writing puff pieces and, basically what other politicians that don't even understand the technology, they're just blaming Bitcoin. Bitcoin didn't do anything, guys. Actually, it's come out in the bankruptcy hearing, FTX didn't even own any Bitcoin. They were selling you fake Bitcoin. It's appalling, but again, guys, so shout out to Tom Emmer. Hopefully, he's one of the good guys in Washington fighting for us because there's not many. I'm going to be honest with y'all. There's not many. Check this out, guys. U.S. Senator Elizabeth Warren says crypto will ruin economy. Community response. Elizabeth Warren's Wall Street Journal op-ed, which correlated the fall of the FTX crypto exchange to crypto ruining the entire economy. Wow. So check out what she said, guys. Warren wrote, the crypto industry is on the well-worn path of financial innovation, which starts with exciting rewards but ends in crippling losses. She compared it to the subprime mortgages of 2008, penny stocks, and credit default swaps. The senator said what happened with FTX should be a wake-up call to regulators to enforce laws in the industry. Okay, guys, this is Elizabeth Warren. Guys, she's either dumb or she's being told to say this. Maybe both, because FTX and Sam Bankman-Fried broke countless laws. They were in bed with the SEC. They were in bed with the regulators. No amount of regulation or no new laws would have stopped this. What FTX did has nothing to do with Bitcoin, has nothing to do with crypto. These were criminals who were trying to create a monopoly on the industry through their regulatory power, through their buddies that they were all in cahoots with. It's all coming out, guys. The SEC, and it's coming out that our government actually knew what they were doing and did nothing, Let retail lose all their money. $10 billion gone. It's disturbing stuff, guys. Guys, please, if you know Elizabeth Warren, write her. Write to your state representatives and expose the truth, guys, because Elizabeth Warren, when this is all said and done, is going to look really, really stupid. Really, really stupid for saying stuff like this, guys. Very, very uninformed, guys. We need to expect more from our political leaders. We need to expect more because this is very, very ill-informed stuff, guys, that she's going to blame crypto and like any type of law or regulation. There already are laws against, fraud. I mean, come on, guys. All right, next story, guys. Cointelegraph, approving a spot ETF is all about political power. Wow. So this guy, Mr. Boring, founder of CEO of blockchain advocacy group Chamber of Digital Commerce, placed the lack of approval of a Bitcoin exchange-traded fund in the United States query on the SEC. Chair Gary Gensler suggesting politics played more of a role than economics. Absolutely, guys. So think about it. There's a futures Bitcoin ETF. There's a Bitcoin trust where you can buy paper Bitcoin, but not a spot trading Bitcoin ETF. Why? They don't want to do it for some reason, guys. It's got to be politics at this point. You can buy Bitcoin mining companies. You can buy, MicroStrategies, which holds a bunch of Bitcoin. You can buy paper Bitcoin, but you can't. There's no spot ETF. Something's not adding up, guys. And again, it's the same people. Gary Gensler, the head of the SEC, who was in bed with Sam Bankman-Fried, who, Gary Gensler, he knew Sam Bankman-Fried's parents. I mean, it's a big club, and we ain't in it. Next story, guys, Crypto Potato. Institutional investors are still buying crypto, according to a Coinbase survey. That's very interesting, guys. So Coinbase is tracking analytics or, after the FTX fallout, if people are buying crypto or not. Well, check out this, guys. So Coinbase did this survey, and regulatory clarity is a top concern for institutions considering investing in crypto. So this is the survey, guys. So, most of the institutions are saying the uncertain regulatory environment as the main reason, and then volatility being the second reason. It's funny, guys. ESG considerations are way at the bottom because we know that all that ESG narrative is complete baloney. It's complete BS, guys. But as far as I'm going to address the first two things, the uncertain regulatory environment, as Ted Cruz told you all yesterday episode, guys, even Ted Cruz said that most people in Congress, he might be able to find like 3 or 4 people that even understand Bitcoin. So how are they going to write laws on it when they don't even understand it? And then there's a group of them that do understand it, but are getting financed by the central banks. That's their biggest campaign donators. That's telling them, no, kill this stuff with regulation and legislation. We do not want crypto because it affects our central banking model. And then, guys, the second thing I'm going to address, the volatility. I want you to understand something. This is a new asset class. Bitcoin, crypto as a whole, is a new asset class. So obviously, it's not fully implemented in society. I mean, guys, we can't even, the second largest exchange just went under. So, of course, there's going to be volatility. It's a new asset class that isn't fully adopted. It's kind of like, the early days of the internet. Look at how volatile tech stocks were. But as time goes on and the technology gets adopted and you flush out all the bad actors, then you're going to see the volatility go down. And that might be 5 years from now. That might be 10 years from now. Might depend on who's the president. I don't know. But ask yourself this. Bitcoin's been around 10 years. Do you guys really think it's going anywhere? When you see, Coinbase coming out saying they hold billions of dollars worth of Bitcoin, MicroStrategy holding millions of dollars of Bitcoin, the Chinese government holding billions of dollars of Bitcoin, you think they're just going to get rid of it and risk, being an economic superpower, just destroy all their Bitcoin? It doesn't even make sense, guys. It doesn't even make sense. So I'm not too worried about the volatility, guys. The volatility is really where you make money. And I'm going to cover that on this channel, guys. As always, not financial advice, because I'm going to be buying a lot of Bitcoin whenever I think we get to the bottom, and I'm going to be trading it. I'm going to play the game. I'm going to play the game and try to make, my goal is to make 6 figures in crypto this year. Can I do it? I don't know, but got to set a goal. Anyway, next story, guys. So this is from Bloomberg. El Salvador steps closer to issuing controversial Bitcoin bonds. Presidency dispatches a digital securities bill to lawmakers. President Bukele aims to raise $1 billion via Bitcoin bonds. This is serious, guys. El Salvador is creating the Bitcoin standard. They are the first country, to my knowledge, to actually embrace the technology. And what we're seeing is their GDP go up, their crime go down, their tourism go up. By every measurable metric, El Salvador is the shining star in the world for not just, innovation, but also freedom right now, guys. So, the mainstream media is going to give you another spin on the El Salvador thing, but that's because they fear this working. They fear this working because if this works, then think about it, guys. Countries are going to dump the dollar. They're going to say, wait, why are we going to keep all these dollars that are deflating if Bitcoin's going up in price and is a great store of value and is, protects us against baseless sanctions? They're going to adopt the Bitcoin standard. Doesn't that make sense, guys? Think about it. Next story, guys. New York AG pushes prohibition of crypto purchases via retirement funds. And it says the turmoil surrounding a crypto exchange, FTX and Sam Bankman-Fried reaffirmed regulators' belief that the need for stricter oversight across the crypto ecosystem, seeking investor protection against a similar fallout. New York Attorney General Letitia James recommended prohibiting crypto investments in defined contribution plans and individual accounts, IRAs. Think about that, guys. They're going to tell you what you can do with your money. It is my money. If I want to put Bitcoin in my IRA, why should the government be in the middle of telling me I can't do that? Why? What sense would that make, guys? Your money is your time stored. You can do whatever you want with it. They can't tell you you can't do this. This is craziness, guys. And again, this is New York. And again, let's see how this falls out, because I don't think this is going to go through. But you guys, New York's got Wall Street on New York, a bunch of rich people in New York. You think they're going to want this? You don't think Wall Street wants to get in on this crypto action? Of course. They're just waiting. They ain't got the green light yet. I showed you in the Coinbase thing that the regulatory uncertainty. Once some clear and fair regulation is established, then Wall Street's going to get the green light. And then guess what? Once Wall Street gets in, you'll see, guys. You will see. The Block posted this. Crypto winter is not that cold. Coinbase survey shows 60% of investors increased allocations over 12 months. So, guys, with all this FTX news, with all this, crypto regulation news, have you been buying the dip? Let me know in the comments, guys, because according to this article, that it's not scaring off retail, that we're still buying, people are buying the dip, and they're taking advantage of these opportunities. Next story, guys. Sam Bankman-Fried is alleged to have lost $100 million of FTX's money at online casinos, while poker player Tom Dwan already knew about the company's issues. Wow. Why isn't this in the news, guys? Why isn't this? Guys, this is a quote from Tom Dwan. He's a professional poker player. I basically knew they were insolvent when FTT was still at $22. I hope it was just in treasuries and mild misappropriation of funds, and I got a bunch of flack in groups in public for suggesting people be careful and withdraw at least some, and so many rushing to defend him. Guys, he's exactly right. Guys, they didn't even have an accountant. They were just putting all the money in a fund and then just extracting it to buy penthouses in the Bahamas, to send money to Joe Biden and the Democrats and some Republicans. They were funding Republicans too. But the point is, guys, this was fraud at the highest level that's being covered by our mainstream media. And now the rumblings are coming out. That's why you see the mainstream media covering a little bit more, because they're losing credibility by not telling the truth. So they're just kind of slow dripping the truth. But guys, it's disturbing. Go down a rabbit hole yourself. Don't take it from me. Next story, guys. Oh, this one hurts me. The Hodl Times. Local man avoiding family. They convinced to buy Solana at last year's Thanksgiving. All right, guys. So as you know on this channel, I've been super bullish on Solana. Obviously, I know all the bad stuff with Solana. It's centralized. It goes down all the time. I get it. Guys, I'm following the big money. If the smart money's investing in the shit, I'm investing in the shit. Unfortunately, Solana, the FTX exchange, I believe, is built on Solana. FTX held a lot of Solana, and apparently they were manipulating the price, something I couldn't have known. Now, what do I believe is the future of Solana? I don't know, guys, because it still has a huge ecosystem. There's still a huge, crypto gaming, NFT development on it. I mean, is it going to go to zero? Is it going to be here next cycle? I really don't know. I really don't know, guys. But again, I'm going to see where it bottoms out at, and I'll probably get my average cost down. I don't know. I really don't know what to tell you guys. If I was wrong, hey, I'll be wrong on this one. It happens, guys. It happens. But again, I'm just sharing you the information as I get it. Check this out, guys. JP Morgan. This is from JP Morgan. U.S. mid and small cap banks, crypto banking weekly collapse of FTX might prove to be a catalyst that moves the utility value of crypto 2 steps forward. Check out this part of the article, guys. This is what I found interesting. Moreover, while the news of the FTX collapse is empowering crypto skeptics, we would point out that all of the recent collapses in the crypto ecosystems have been from centralized players and not from decentralized protocols. Exactly, guys. JP Morgan Bank is telling you what I've been saying on this channel. The collapse of FTX is not a failure of crypto. It was, if anything, exposing why we need Bitcoin. That these bad actors, that these central banks, working with regulators, working with politicians in cahoots to hurt you, the retail investors. JP Morgan said it, not me. Go talk to JP Morgan. FTX hacker can be caught now. Here's who might reveal the identity. So let's talk about this, guys. This is a reason why I sold my Bitcoin, my Ethereum bag, is because a hacker, quote unquote, took a lot of the money in the reserves of the FTX account and is one of the, I believe he's in like the top 30 holders of Ethereum, and started dumping the Ethereum. Then came out that he was buying wrapped Bitcoin, probably an attempt to dump. We're just speculating. It could be an attempt to dump the wrapped Bitcoin to directly hit the Bitcoin price and tank the price of Bitcoin. It's something we're going to monitor. Hopefully this hacker gets caught, guys. If I had to guess, it's probably an insider FTX. Maybe not Sam, but somebody at FTX. But I think the crypto community is going to find out who it is. I'll be sure to let y'all know if we find that out. Last story, guys. U.S. lawmakers strongly urge Fidelity to reconsider its Bitcoin 401k. Guys, it's the same people. Senators Warren, Smith, and Durbin alerted the U.S. is already in a retirement security crisis and urged Fidelity to halt its Bitcoin endeavor. Investing in cryptocurrencies is a risky speculative gamble, and we are concerned that Fidelity would take these risks with millions of Americans' retirement savings, they said at the time. Guys, they don't care about your retirement savings. They don't care, guys. They're doing this because it's going to help the central banks. The central banks do not... Guys, you think this once we have Bitcoin, once we're completely on a Bitcoin standard, you won't need Capital One. You won't need Chase. You won't need any central banks. Anyway, y'all, I'm Classic Kev. You made it this far in the video. Literally drop me any comment down there. It helps with the YouTube algorithm. Give this video a like. It really helps support the channel. Anyway, y'all, thank you so much for watching. I'm out, y'all. Peace.